So what did TCE inflation have to say about the markets? What about the unfortunate events that we could call the presidential debate? What, if anything, is happening with the jobs number on Friday? Folks, we've got the one and only Dan Bird here to talk about what is going on in the markets, what he sees coming, that and more. All righty, sir, what's going on?
Not much. How you doing? Did you have a nice trip?
I did, yeah. We got to see family, friends, have a bunch of meals. I got to run a bunch, which is important because I'm training for a marathon. So,
Oh,
yeah,
really?
it was all good. Yep.
Cool. Very nice.
Yeah,
I like it.
November 3rd, the first time I ever will run a marathon. That will be
Isn't
the
that the
first
day
time.
before the election?
It's 2 days before it's the Sunday before the election, so
Two
it's
days
2 days.
before. All
Yeah,
right. That should be interesting.
I might be recovered, but yeah, by then.
I like your think hat.
Yeah, Think Media. Shout out Sean Cannell and team.
Oh, okay. Got it. I thought you were making an exclamation.
I was just asking people to think. No, I'm repping a friend's brand.
Oh, very cool.
Yeah,
I should wear my hat, my BTFD hat.
there you go.
Buy the frickin' dip.
Yeah, exactly. I knew it. Yeah, there you go. There you go. Well, let's talk about where do you want to go first? You want to talk inflation? You want to get the unfortunate disaster of the debates? You want to talk jobs? What do you want to talk about first?
Let's talk about the inflation number, which was basically pretty tame.
Yep. Heard it
Didn't
tick
have much
down
effect. It
two
came in,
6, 2 7. Yeah.
yeah, came in as expected. It was, still isn't really going down. So that doesn't like didn't go up either.
Yep.
So I think everything is just going to stay like it is.
Okay. All right. So inflation, I would argue if you look back at inflation for the month of May, which that was the PCE reading, on general, inflation is the Fed is smiling on general. Right.
Yeah.
Not,
Right.
so at least when you look at May, we'll see where we go from here. But in general, because the first 4 or 5 months of the year were rough on inflation. Right.
Yes.
It was going the wrong direction. So May was a welcome reprieve, is how I think I'd summarize it.
So coming in high, but as expected, is a welcome reprieve.
Well, I don't know that that's fair to say for May because CPI and PPI, all 8 metrics, which again, month on month, year on
Right.
year, core and headline, were all 1/10 lower than expected.
That's true. They were a little lower.
Right.
Yeah.
So that was 8 for 8. And then PCE, which again, they can basically calculate once you have those other metrics, came in as expected. And it did go down. It went to 2.6 from 2.7. It's just
That's
as
true.
expected.
Yeah, that's true.
So
As expected, but yes, down from the previous month. That's
so
true.
on general, the Fed is smiling from inflation in May. That could change tomorrow, but look, let's take the win when we can.
Yeah, I don't think it's going to change. It's going to actually get better.
Oh, good.
As I've been saying, and I'll share this again when I get into the charts, but as I've been saying, inflation will continue to come down. It'll come down a little bit next month, either flat or down a
Yeah,
tenth
this is
again.
the month we worry about, right? This is the one because
Well,
of the base effect.
June was the
Oh,
one we worried about, and it actually
good.
came in lower.
Good.
July is also not as bad as what June looked like, but not great
But
either.
not
So,
okay.
so I think it'll come down a little, maybe flat, maybe it down a little bit, but then
Okay.
August, the August
Yeah,
one is going to be
it's
dramatic. And
gonna.
September is going to be even more. And by September, we'll be below 3%.
Oh, now just so we're clear, that's CPI.
CPI. Yes.
CPI headline
Headline. Headline.
below 3%. It'll be the September reading. Now, is that the September reading that comes out in
Yes.
October or the September reading?
No, the September reading for August.
Got it. So
And
September.
I'll show you why in a minute.
That'll be welcome news for everybody.
Yeah, the Fed will declare victory, but on the other side of it, unemployment will be going up.
So I mean, we can get into it later, but I'm going to ask here: where do you think the monthly unemployment rate is in September? We'll get that the first week. Do you think it's 4.4?
In September, well, the one we
Yeah.
get next week, I think will probably be flat.
Yeah, it'll be 4. Yeah, yeah. I'm talking about. I'm just trying to tie inflation sub 3. What's the
Yeah,
job market in September?
That's the right way to do it too. I think it'll be 4.2 or higher.
Ooh, Somroll in full effect.
Right.
Recession full effect. I got you. Okay.
Yep.
So I guess you're
and then
calling for a September rate cut then.
that's right. I said that last time.
Ah, no. All right, we'll see. You could be right.
We'll see.
I'm going to stick with November because I don't like to change my opinion.
Why not? If you get new data, you should change your opinion.
No, I find more fun in just admitting when I got it wrong. I have no problem
Okay. Well,
admitting
I
I'm
was
wrong.
saying November too,
But now you're on
originally,
September.
but now I think September.
All right,
And
I can live with
and
that.
I'll show you why here in a second.
Awesome.
All right. So we haven't talked in 3 weeks.
Thank you again for doing those solo sessions. I appreciate it. The audience truly appreciates it.
Yeah, no problem. I like doing it. I love when folks put comments in. Sometimes the comments they put in, the questions they ask, sometimes are great questions for follow-on
Yeah.
conversations, discussions. I'm going to be doing a Zoom call for all of my subscribers the weekend after the 4th. So that's next weekend, next Saturday.
Okay, cool.
And that's usually all based on what people want to talk about. So
That's
those
awesome.
kind of questions help to fuel some of the conversations we have on this open, basically it's an open mic Zoom
Yep.
call.
Oh, I love it.
Yeah. All right. So here's my website if you want the newsletter, which I'm going to use that a lot in this session today for the conversations we talk about. It's right here in this little box, newsletter. We'll talk about these trend models, which I've just added in a minute.
wow.
I don't think they were on last time you and I talked.
No, I had not seen these before.
Yeah, I'll show you that in a second. But first, let's go to what we just talked about, which is first CPI headline. Here's the September and
There
October
you go.
reports right there.
Yep.
So here's, this one drops off in July. It's a little bigger than the one in June. So that's why I think, July, where it's 3.3 right now, will probably be either flat or maybe down 3.2 in the July report. And then here's the August report right here.
Yep.
Again, that'll probably be either flat or down to 3.1 in August. And then look at the huge one.
Yeah.
That's the September report for the August timeframe.
Right.
All right. So that September report is a huge one. And as long as commodities cooperate, which I think they probably will, then that's why I think we'll be below 3 for headline.
That's kind of a bold call. I'm a fan. I love it. I like it. And it logically makes sense. I could see it. I could see it as well.
Yep. It does. I mean, it's just the data. That's all I do.
Yeah, it's just math. It's just math.
These are not opinions. I mean, they are opinions to a degree, but it's based on data.
It's informed. So, yeah, it's an informed opinion.
Right.
Yeah.
And then the other one is unemployment, which we're going to get a reading next Friday.
Yeah.
Right now, the target for the SOM rule is 4.27.
Right. But and that'll inch up slowly each month.
It will continue to inch up slightly, but the Fed will act before it actually gets to the SOM rule.
Yeah. So I don't, let me say it this way. The Fed should act before the SOM rule is impacted. I'm not convinced they will. This is why I'm saying November. I think the Fed's going to be late and they're going to have to go a half in November.
Yes, I've heard that. I've seen articles like that. I am giving the Fed more credit than that.
Yeah.
I think, like I said, because of inflation, CPI, headline CPI getting below 3 in September, the Fed is going to declare victory.
Yeah, you could be right.
But they will say, and if the unemployment rate is up to 4.2 by then, it won't be at the SOM rule. But again, they want to act. They'll act before the SOM rule.
Yeah, you have too much faith in the Fed. I don't think they will.
Because the SOM rule says recessions start when this hits.
Correct.
Right? They don't want to do it then. And of course, then once they cut rates, then 5 to 6 months later is when the recession starts. So if they cut in September, that puts the recession in March, between March and June next year.
Yep.
Which I think is what's going to happen.
Okay. Yeah. You're really of the stance that 2025 is going to be pretty shitty.
Yes, probably after the middle of January.
Okay, that makes sense. So for yeah, okay, I can see that.
And who knows what's going to happen this year? I mean,
Yeah, we're
there's
not out of the woods yet. Yeah.
all kinds of things that could happen with politically this year.
Yep.
So let's talk about that. Let me go to my newsletter and we'll have this discussion using the newsletter.
Okay.
Happy 4th of July.
Yes. Happy 4th of July.
I think we all need a refresher course.
Right.
Okay, here's last week's numbers.
Mm-hmm.
Core PCE actually went from 2.8 to 2.6.
Oh, there you go. Okay.
GDP was expected to drop, but it didn't quite drop quite as much as they expected.
Mm-hmm.
But still went down. So, I mean, everything's weakening, but not dramatically. So,
yeah, I think that's a good word, weakening.
Here's next week. Powell speaks on Tuesday. JOLTS numbers. Holiday on the 3rd. I mean, on the 4th. Wait, is the holiday on the 3rd?
No, the 4th.
Oh, it's an early close. That's what it is.
Yeah,
early close on Wednesday, 1 o'clock Eastern, and then holiday on the 4th, and then we've got the jobs number. So right now, the projection for the rate is 4%, which is probably correct.
Mm-hmm.
The payroll number dropping to 180, it'll probably come in higher.
Yeah.
So
let me ask you this question. So I think it's been the last 2 months, the unemployment rate has ticked up a tenth, 3.8, 3.9,
yeah.
3.9,
Mm-hmm.
4.
Mm-hmm. Mm-hmm.
What happens if it goes to 4.1 and that trend continues?
Next week?
Yeah. Friday.
I don't think anything really will happen at 4.1.
Okay.
I don't think the Fed will change what they're doing. I don't think the market will.
Okay.
The market might actually like it, frankly.
Yeah, true. They make September cut more likely. Yeah.
Right. Yeah.
Okay. I like it. It makes sense.
But it makes my thesis more.
Oh, for sure. A 4.1 on Friday makes your
right.
Yeah, absolutely correct.
4.1 in July and 4.2 in August.
Yeah, you're looking good for your call. Yes.
Right.
I agree.
Right. But I think it probably will come in at 4. All right. So I had a we'll talk about the debate here. So we're not going to talk about our opinion of the debate. Just I think everybody knows how it went.
Yeah, we don't need any politics on this channel.
No, everyone has seen all the talking heads giving their opinions.
But let's talk about how it impacts the market. That's what they come here for.
That's right. Well, not only that, but I had a question from a subscriber that said, and it was funny because he said, everyone's talking about Biden stepping down and maybe not completing his term, or stepping down from the race, but completing his term. Yep. I mean, there's impacts on either one of those things.
Sure.
He goes, "What has that ever happened before?" He said, "I'm only 28. I don't know if anything like that has ever happened before." Do you know?
Well, we've had several presidents not complete their term, but those were assassinations.
Or deaths. Or
deaths. Have we ever? I don't know that we've had anybody.
Or resignations.
Oh, Nixon. Yeah, Nixon resignation. Yeah. I don't know. Have we ever?
No,
I'm
talking about a president running for his second term who has completed a successful first term, or reasonably successful, and decided before the convention that he would not run for a second term.
For some reason, I think this happened one time.
It did.
Yeah, but it was like, God, 1800s or something?
Nope.
No? When did it happen?
1968.
Oh, 68.
Johnson.
Oh, Johnson. Yes, yes. Okay. Yep. Okay. So what happened? I don't know 68.
So here's a subscriber right here. asking me about that. I said the closest thing to it was LBJ in 68. He was serving out his first full term after taking over after the Kennedy assassination, was widely expected to be the Democratic nominee. On March 31st, gave a televised speech that was mostly about the status of the Vietnam War. At the very end, he made the following famous statement: "I shall not seek and I will not accept the nomination of my party for another term as your president," which threw the whole Democratic Party into turmoil and chaos.
Okay. Oh, all right.
Democrats had an open convention. They had to pick somebody, basically appoint someone.
Okay.
And they picked Hubert Humphrey, who happened to be the VP, which is kind of standard for the way these things would work. Typically would work.
Next in line. He was a heartbeat away. Yeah.
Now Johnson did not resign. He didn't step down.
Right.
He said, "I will not accept the nomination," which means he will finish out his term.
His term, yeah. Mm-hmm.
Which I think is what Biden will do. By the way, I've read a few places that he's meeting with his family today.
Yeah, I heard that too. But in fairness, that was scheduled before. So
yeah.
But who knows?
So Humphrey was appointed, and Nixon won in 68.
Yep.
And we all know how that turned out.
Yep.
So naturally, I was curious what happened with the market in that year.
Yeah, me too.
Keep in mind, it was during a secular bear market. It actually wasn't officially a secular bear market. It was at the very end of a secular bull market.
So transitioning.
Right at the beginning of a new bear market.
Okay.
Other than a 5% correction in July when RFK was assassinated on June 5th, did not slow the market down from ending higher. Here's 68. So here's March 31st. LBJ says he will not accept the nomination.
Okay.
The market loved it. Went up big time. Here's Kennedy assassination. Actually, in April, he made that speech in March, and 2 weeks later is when Martin Luther King was assassinated.
Oh, geez.
I didn't put it on this because King wasn't running.
Okay.
For president. Kennedy was.
Right.
But Kennedy was assassinated right here. Market just went sideways. Democratic convention was here, roughly about the same time as it's going to be this year in August.
Yep.
So they nominated Hubert Humphrey. Market took off. The election was right here. Nixon was elected. Market finished.
Did Nixon trounce him?
Yeah, Nixon, I think it was nearly a landslide.
Yeah, okay. Yeah.
And most of the issues that Johnson had was related to the Vietnam War.
Of course.
Which Nixon inherited, and actually the worst part of the Vietnam War was after Nixon took over. But he also got us back out too.
Yeah.
So
and then the bear market started.
yeah. So that look at what happened after that. But here's the rest of the year.
Yeah.
So here's how the year ended at all the way up at a high again, which is exactly what I've been saying that this year is going to end.
Yeah. Okay.
Right. And I said, I don't know if you remember this, but
yep.
A few months ago, we can go back and all the videos are there. A few months ago, I said I would not be surprised if neither candidate is on the ticket.
Yeah. Right.
So we'll see. So here, this was basically the beginning of the secular bear market right here.
Right.
That is a 35% decline.
Almost in a straight line.
Yeah, almost a straight line. Starting in basically January
69. Yeah.
January 69.
So that's a pretty rough January 69 to, let's call it, what would they be, May of 70? That's a rough 18 months.
Yes. Yep. Rough 18 months. And I think it may have actually gone down even more than that. Let me see. I have that chart here.
Yeah, bottomed in 74.
Yeah, bottom 74, but 60, 70 is right here. So here's, yeah, so that
Okay.
probably was right. It
Probably
probably
near the
started,
bottom. Yeah. Near
yeah,
the
it probably
bottom.
started recovering right after in
Okay.
70. But that was the secular bear market. Secular bear market actually started right at the end of 68
Hmm.
or near the beginning of 69. Even though this box has it back here, but it really began with that big decline right after the election.
Yeah.
Now, that's one big difference between this time. We are in
Yeah.
a
Because
secular bull
bull
market
market. Right. Yep.
right? So that will definitely have an effect.
Okay.
So that's interesting.
Yeah. I
We'll
like
see
it.
how it plays out this time.
Right.
And, there's still going to be a lot of question marks coming up.
Oh yeah. The next 2 weeks are going to be
Yeah.
interesting because if there's a change, it has to be soon, and if not,
Yeah, that's right. Yeah. It has to be soon because, well, most of the states will not lock in their ballots. They won't put the names on the ballots until after the convention.
correct.
So they've really got probably until August and still be able to do something. But they really need to make some decisions. I mean, they need to decide, they need to have time to decide who that
Well, they need to
appointed
have
person
somebody that
will
can
be.
actually have time to run.
Right, right.
Otherwise, it's just going to be look like the deep states picking winners and losers, and that's not going to go over well.
Yes, exactly.
Yep.
And
Okay.
who knows who that appointed person will be. And then who knows what's going to happen with Trump between now and then too.
Yeah. Yeah. We'll see. It'll be fun.
So I've talked about this before. Focus on the green line first. So this goes back, this is the NASDAQ. So it goes back to when the NASDAQ started in 71.
Yeah. It looks like we're up 18% in the first half. Can you believe the first half is over? Crazy.
Yeah, I know. Almost, yeah, about 18%. The
Right.
green line is when a sitting president is running.
Mhm.
That's usually the best scenario for the market. The black line is all election years. There was another chart. Actually, I think I have it over here. If not that one, there wasn't. Oh, this one here. Yeah, this is one when it's an open field, the red line. So, and I showed this before, and I said, way early on, I said, as long as the sitting president is running, it's going to be very good for the market. But, and I think that's when I said, I don't expect either one to be on the ticket.
Yeah.
And if something happens and Biden's not running, then we drop down to the red line
Right. Okay.
down here, right?
Mm-hmm.
So the black line is all election years.
Got it.
So that won't be good for the market, but we're also way ahead of the mean. We're way above the mean.
Right.
You can see that with that pink line. So this is from Stock Traders Almanac, and this is just last week. They said, are we due for a little mean reversion?
Yeah, you would think.
So the mean reversion would take us basically down to about this 10% level, so roughly about an 8% decline.
Okay.
And I think 5 to 10% probably is reasonable for the market to drop that much.
Okay.
But you can see how far above
Yeah.
the average we
So
are.
so what do you do with this kind of information? Are you more in cash today than maybe you were a month
I'm
ago, or?
mostly in cash. Not completely. I actually have a few short things going,
Oh, on some shorts. Okay.
and and they're debit spreads.
Okay.
So
All right.
quit debit
We don't
spreads.
we don't need to get into that on this. If
No, it's
somebody
that.
wanted to do that, they could go on your
Yeah,
special
yeah. They can research it. Yeah,
go if you want to do this. If you want to talk about debit spreads, go join his
yeah.
service and join
I
his
have a whole
Saturday calls.
page. I've got a whole page on it, and I actually describe how to do one.
Yeah.
If
We
anybody,
don't need, I don't want to create any confusion. I'm not a financial analyst, blah, blah, blah.
right?
Got it.
Yeah.
Cool.
But here's a little fly in the ointment of this, this reversion to the mean,
Sure.
and that is historically the next 12 days is a very bullish period.
Of course it is.
So that creates confusion. What the heck do I do now?
Yeah. When in doubt, sit tight.
Yeah, sit tight, don't do anything. Stock Traders Almanac, their recommendation is, if you've been following it from the beginning and you're up quite a bit, then just move your stops up, make your stops very tight.
Right.
So if we do run into this bullish period, you can participate, but if we don't and it reverses, then you're out with a very small
You're out.
loss.
Yeah. Yeah. You get your profit. Yep. Good.
Right.
I like
But
it. Makes sense.
This is historically, it doesn't mean that will happen again, but historically,
Yeah.
the period from, the week of the 4th of July and the week after the 4th normally is a bullish period up until the 12th, which is a Friday, July 12th. So here's the S&P, and I'm going to show you a few charts. Actually, I'll show you quite a few more in the next session. We're going to talk about is NVIDIA, the new Cisco.
Yep.
In the next one, and I'll show you some of the Magnificent Seven. But a lot of the charts look like this. So Friday, the market made an all-time new high. You see that little?
Yep, little tick. Yep.
Little tick right there above the previous high. Made an all-time new high, and the rest of the day, that was at about 10:30 in the morning, and the rest of the day it just sold off. And everything looks like that. NASDAQ, other indexes, stocks, they all look very similar. They all sold off. Now, I don't know if that's because it's the last day of the quarter.
Yeah.
And, traders are rebalancing their portfolios, which is probably a lot of it, frankly.
Yeah.
But I don't know if it's going to continue. So we're going into a bullish, next 12-day period. But will this continue? We don't know.
Okay.
We'll see. Here's the NASDAQ. Looks just like that. See, look at them both together.
Yep. See that.
NASDAQ and S&P, they both look very similar. All right. Weekly performance, it's a mixture for the sectors. A mixture of communication services and discretionary are aggressive sectors. Energy and real estate are defensive sectors. So a mixture of both. The market's not sure which way it wants to go. And this is, I'm going to zoom back out for this one. This is a 10-minute chart. And it has all of the sectors down below. This is small, but just look at what it looks like. So here's what I talked about. Went up, made a new high, 10:30 in the morning. Rest of the day is sold off.
Yep.
These are all the sectors. So the red line across here is Monday's open. For technology, Monday's open. You can't really see it because it's way up here in the volume section.
Right.
But technology ended lower than Monday.
Right.
Okay. Financials were basically flat. Discretionary was flat. Communication services, which is the internet stocks, was really the only one that outperformed. So its red line is down here. So it did better than Monday. Industrials was flat. Healthcare was flat. Staples was higher. Energy was higher. Actually, energy probably is the one that performed the best. Utilities was a little lower and materials was lower. So everything was basically down except for communication services and energy. Those two. Got it.
Okay.
Were the ones that did well. So this is just a 1-week view. I put this up every day and it's on my website. Cool. On the charts page, there's a 10-minute chart right here. So this is the aggressive and the defensive sectors.
Perfect.
So anybody can take a look at that. So that was interesting. The market really, it sold off Friday and all the sectors really didn't do much. And then this is the relative rotation chart.
Yeah, this is fun.
You see technology and the NASDAQ 100 moving from leading to weakening. And here's energy, financials, discretionary. These are starting to move up.
Got it. Okay.
And the top 10 best and worst, FedEx actually was the best performer for the week. Datadog did really well, and MongoDB and Atlassian, those are all software.
Look at Tesla in the hunt.
Tesla actually was in there too, yeah.
Yeah, look at that.
Tesla was in the top 10, so was Ford. So automobiles did well. There's another software. So you got 4 software companies out of 10. And then the worst performers, Nike did bad, Qualcomm, Micron. And then for the small and mid caps, these are the names for those.
Cool.
And then the underperformers down there, Hertz, et cetera.
Very cool.
Right. Sentiment. So this is the National Association of Active Investment Managers. Market was making new highs while sentiment was becoming more bearish, or let's say less bullish.
Right.
Right. When it gets too bullish, that's not good either. It's usually when you're getting near a top, but it's actually a negative divergence.
Yep.
So sentiment is starting to indicate that things might pull back. And this is the breadth indicator. So this is interesting. So remember, we made a new high, all-time new high right here. This is the NASDAQ 100 advanced decline line. Could not make a new high. In fact, all the way from this high and this high. So this one was higher than this one, but this could not make a new high. And this one was higher than this one, could not make a new high. New York Stock Exchange, same thing. It's actually lower. Large caps, same thing. Mid caps, actually lower. Small caps, even lower. So even though the market is making new highs, it's doing so with fewer and fewer names. Again, the large cap technology stocks are continuing to drive the market. And if we look at that from the, let's see, cap weighted versus equal weighted. Cap weighted is all the big names, basically.
Right.
So, and these are the names. So the top 10 of the S&P, 35% of them is just these 10 stocks, 9 stocks basically, because Google's counted twice. So you see the cap weighted at the top and you see equal weighted at the bottom, the red. This clearly shows you who's leading this market right now.
Yep.
And then the Qs, which is the NASDAQ 100, 50% is represented by the top 10 or the top 9 stocks, basically.
Wow.
All right. And again, you can see the cap weighted significantly outperformed, but equal weighted could not make it back above a new high. So we'll talk about this more when I talk about NVIDIA. But these are the stocks to watch, because if they start to roll over, then they're the only things keeping the market up right now.
Cool. Definitely something to watch. Well, I look forward to this next conversation, but let's remind them what your website is.
Sure. It's breakpointtrading.net, and free newsletter is in the upper right-hand corner.
Yep.
You can just grab that.
If
I'll
somebody
show you these trend models in the next one, because we're going to look at all the Magnificent Seven also.
Yep. And if somebody wanted to join and be a part of next Saturday's session,
what
do they need to do?
If you wanted to participate, actually, subscribers, there's a webinars and newsletters page where I've recorded all the previous Zoom meetings.
Yep.
And you can see they go 2.5, 2, 3 hours. It's just an open mic. It's everybody asking questions. A lot of times they want to look at certain stocks. So I'll bring charts up.
But the question is, what do they need to buy? That's what I'm trying to ask. Sorry.
Yeah, I get it. I know. Hang on. So on the home page, at the very bottom. Oh, that's interesting.
There should be buttons there, Dan.
I know. What happened? I don't know what happened. I was making some changes on some of the pages today, so there it is.
Oh, there it is.
Just had to refresh.
Cool. So they need to do the annual, or the monthly is good?
They can do the both. They can do either one. So
Okay,
monthly, if you just want to try it out, there's a 7-day free trial. So there are some people that will sign up for the monthly and just check it out, look at all the different pages, and then sign up for the annual if they see value. And if they don't, they just cancel it.
Makes sense.
Just fine. If they just want the newsletter and they want to get a reminder, you can do the $0, which does not ask for a credit card.
Yep.
It's just get a reminder that the newsletter is available. But these two is what will get you into next Saturday's Zoom call.
Very cool, buddy. I appreciate you. Next up, Cisco, NVIDIA. I like it. Take care.
Sounds good. Take care.